Hey guys, it's Mark Pyers, home-based business tax coach and wealth coach, better known as a CEO and founder, along with my beautiful wife and business partner, Mrs. Lavita Pyers, of an incredible tax educational platform where we educate the masses. The more you know, the less you legally and ethically owe in taxes. We believe that everyone should pay every dime that they owe in taxes and not a dime more. And so guys, look, I'm excited because I'm going to be speaking on the wealth side of money today. And if you are a homeowner, I am about to change your life. And so what I want to ask you guys to do is to buckle down, get rid of any distractions around you, and I'm going to share some information with you that could save you hundreds of thousands of dollars. But you're going to have to be the one to make the decision. And so with no further ado, guys, let's jump into this information. And so again, I want to talk to those of you that currently own a home and those of you that are thinking about buying a home. I want to share with you a little dirty secret that the bank actually tells you but doesn't educate you about. And that is that your low mortgage interest, let's say that you have a 3% mortgage interest, is not exactly what it's made out to be. And so with that being said, I always say documentation beats conversation. Everyone is entitled to an opinion, but not everyone is entitled to their facts. And so let's get the facts. And so I'm on Credit Karma, and you guys can find this online, and I'm going to utilize their amortization calculator. Now, this is how the banks calculate your mortgage and your interest. And so in this example, we're going to say that this individual purchased a home here in California for $600,000. We're going to say that their current interest rate is 3.5% in this example, and we're going to say that their mortgage term is 30 years. So I'm going to go ahead and hit calculate. Okay, so you guys can see right here, this is the total amount of payments after 30 years. And so we can do the math, right? $600,000 was the price of the home, and because you didn't have the $600,000, it's going to cost you $969,937. Now, most of you could probably figure out that math, but what I want to do is I want to go ahead and bring the calculator up so you guys can actually see the numbers. So we're going to take that $969,937. We're going to minus the principal price of the home, which was $600,000, and we're going to hit equal. And so guys, what that's telling you is that it's going to cost you an additional $369,937 if you follow this 30-year loan. You didn't buy one home, you actually bought two homes. I always tell people the bank is running a 2-for-1 special. And that means that you're going to purchase one house, but you're going to pay for two, and that second one is going to belong to the bank, all right? And so if that's not bad enough, that is not what I want to share with you. In fact, let me get right down to business. So guys, I'm going to come down here, and in this example, it shows that this individual first mortgage payment would be on September the 21st. In fact, let me see if I can expand this just a little bit. Okay, now we can see again that this person's first mortgage payment is going to be on September 2021. I'm going to go 1 year out to September 2022. I'm going to highlight all of this information here. And what we're going to do is we're going to take this over to an Excel spreadsheet. And I'm going to go ahead and paste this, because what you're about to see is about to flat out blow your mind. And so what we're going to do is we're going to take the total amount of payments. This is for 12 months. And we're going to simply hit total sum. And then we're going to take the total amount of interest paid. And we're going to come down. We're going to hit total sum. You guys can do this calculation yourself. So I'm going to go ahead and I'm going to make this one bold. And we're going to make this blue. And then the interest, we're going to go ahead and I'm going to make that bold as well. But I'm going to make that red. Okay. Now let me go back over to Credit Karma and ask you a question. If your bank sat you down and said, okay, you're going to purchase a house for $600,000. You're going to get an interest rate of 3.5%, which is a low interest rate compared to where they were about 5 or 6 years ago, right? For 30 years, what would you think your interest rate would be every year? Most of you are probably going to say 3.5%, right? Well, let's look at the devil in the numbers. So how do we figure this out? So what I'm going to do is I'm going to take the total interest paid, and I'm going to simply divide it by the total amount of both payments, principal and interest, and we're going to come out with a percentage, right? And so 22,532. So I'm going to go over here and we're going to jump over here to a percentage calculator so you guys can actually see these numbers, all right? 22,532. And then over here, we're going to put the total principal and interest for the year, which is $35,022. So we're going to simply put that here, $35,022, right? And so let me show you the numbers again. 22,532 was interest, $35,022 was interest and principal. And so if we simply hit calculate, what you'll realize is that this person's interest percentage for the year is 64%. Man, if you guys didn't get what I just put down. And so this homeowner interest rate isn't 3%. This homeowner interest rate for the first 12 months is 64%. Wow. And so what I want to do now is I want to jump back over to Credit Karma. And what we're going to do is we're going to take their second year. So we stopped at September 2022. And so we're going to go from September 2022. We're going to go to September 2023 right here. And we're going to go ahead and highlight this. And again, we're going to go back up to September 2022, which is right here. And we're going to copy this. And then we're going to go back over to our Excel spreadsheet. And I'm going to open up a new spreadsheet so we can keep this clean. And I'm going to simply paste those numbers in as well. In fact, I'm going to paste those numbers on column 2. And then we're going to jump back over here. And I want to copy this header so you guys can follow this information. And then I'm going to paste that in column 1. Now let's go ahead and expand this. We'll go up to about 24. That way you guys can see that. I'll spread these numbers out so you guys can see. There's our interest paid, our total principal amount. We're going to simply again come back down here. We're going to hit total sum. We'll come over here to the interest and we're going to hit total sum. And you can see that the numbers are pretty much the same, 22,089. So what are we going to do? We're going to take that 22,089 and then we're going to go ahead and take this number out. And let's go back and get the total principal and interest, 35,022. So we're going to come back over here, 35,022, and we're going to hit calculate. And you guys can see the second year, their true interest rate is 63%. Okay, so now what I want to do is I want to jump back over to Credit Karma, and I want to ask you a question. Have you been led to believe that your mortgage interest is tax deductible? Well, I want to go ahead and blow that myth out of the water. I've been a tax coach for over 29 years. I've been preparing taxes now for over 25 years. And ladies and gentlemen, I can tell you that 99% of my clients that own a home gets zero tax deduction for their mortgage interest. You say, well, okay, well, what does that mean? So remember we did the math on what the total interest was over the 30-year loan, which is $369,937. Well, here's the real numbers for that individual. If they're not able to write it off on their taxes, that means that they're paying the income taxes on the $369,937. Combine that with the fact that you're paying 60% in the example that I showed in mortgage interest for 1 year. And then we'll come down here, we're going to say $369,937 times the average tax percentage with federal, state, Social Security, and Medicare, 28%. That is an additional $103,582 that this homeowner is going to pay in the form of income taxes on the interest that they gave to the bank. And so the real number is $383,189. Wow. I hope you guys got what I just got through putting down. And so let me show you that again. We're going to simply go back up here. Okay. We're going to take the total payments of $969,937. We're going to minus the principal price of the home, which was $600,000. That's going to put us at $369,937 in mortgage interest. This does not help you pay down the $600,000. It does not put insurance on a house. It does not send your children to school. This is, for all intents and purposes, this is rent on your mortgage, okay? But here's the dirty laundry, is that 99% of homeowners does not get a tax deduction for the mortgage interest that they're paying to the bank. And so now we got to go ahead and add the income taxes. So times 28% income taxes, which is $103,582 additional money you're paying because you can't write it off. And that means that your total liability on that $600,000 is $383,189. When I discovered this information, I said, thank you, Jesus, that I sold my home. Now, I know there's some of you that's going to say, Mark, but my house is going up in value. And that might be true. But in this case, remember what I said in the beginning. Everyone is entitled to their own opinion, but not everyone is entitled to their own facts. And so let's say in this example that your house increased from $600,000 to $969,937. Did you actually really make a profit? Did you actually benefit, or did the bank benefit? Because remember, you're going to now have to minus the $383,189. You said, Mark, okay, what's the solution? Well, the solution is getting out of this rat trap as soon as you can. How would you like to learn some information that can show you how to pay your house off in the next 7 to 10 years without having to earn any more money, without having to make any additional payments, without having to change anything that you're currently doing right now? Well, if you have at least a 680 credit score and 20% equity in your house, you want to definitely go to the link below and request information. Let me say that again. If you currently have at least a 680 credit score and 20% equity, that means you bought the house for $600,000 and you have the house now is worth $680,000, $700,000. You're going to qualify for an amazing loan that's going to allow you to save hundreds of thousands of dollars in interest and pay off your house within the next 7 to 10 years without changing anything about your lifestyle that you currently are doing right now. Now, for those of you that may not be in that position, maybe you don't have the equity, or maybe you need a little work on your credit report, but you are getting slaughtered with this type of penalty for being a homeowner, you want to get the information as well. You want to position yourself to work on putting yourself in those parameters so you can stop the bleeding. Your children deserve this money, not the bank. I believe that the bank should be compensated for making the loan, but they're protected by the asset. Who are you protected by? And it makes absolutely no sense for you to give away $360,000 that you have to pay the income taxes on. If this is your situation, I want to ask you a question. If it costs you $10,000 to stop the bleeding, would it be worth it? I think it would be worth it. The first year you gave away $22,532. Year 2 you gave away $22,000. Matter of fact, let me go ahead and copy this here. And let's bring this over to year 2 just for you guys to get an example of what we got here. So I'm going to take this number and this number, and we're going to simply hit total sum. And in 24 months, you have gave the bank $44,621. I got to blow this up. I want to ask you, How does that make you feel? You gave the bank in interest, something that doesn't help your debt, something that doesn't help your children, $44,621. Can you guys see why I'm so passionate about sharing this information? And so again, I'm going to provide a link that you can get information. Guys, serious people only, because I'm on a mission to change lives, okay? If you're scared, if you're worried about how much is this going to cost you, I want to ask you this question. Go do your numbers, look at the facts, and then ask yourself in the mirror, how much is it costing me not to get this information? With that being said, my name is Mark Pyers, home-based business tax coach and wealth coach, along with my beautiful wife and business partner, educating the masses off the plantation of taxation, and now we're educating the masses off the plantation of what appeared to be home ownership, but guys, in reality, it's home enslavement. This is extortion. But you know what? We don't get to make the rules. But once we get informed, once the wool has been pulled over from our eyes, we can make a decision whether or not we want to continue. And so we have a very powerful concept that is saving people hundreds of thousands of dollars. And what I like to tell people, the most important thing that they're saving is they're saving years off of their life, that they don't have to depend on a job to pay a mortgage just to give the bank the mortgage interest that they're paying the taxes on. Can you imagine if you didn't have a mortgage, how much sooner could you retire and start living life opposed to just existing in life to pay a debt? Again, Mark Pyers, home-based business tax coach and wealth coach. Guys, we'll see you not at the top. We'll see you on the other side of wealth, my friend, because that is where freedom resides.